If indicators really moves the market, central banks, hedge funds, pension funds, prop trading floors, they wouldn't need economists or analysts or policy makers. They would just hire indicator traders. Think about it and let that sink in. So in today's video, I'll show you guys what really moves the forex market or how the forex market really moves. The forex market don't move because of RSI is pushing up or MACD is pushing up. No, those things are backwards. The forex market don't move because of those factors. The forex market moves because of central bank policies, economic data, geopolitical news and tension. These are some of the reasons why the forex market moves. All right. Because there is this big lie being told to retail traders that price moves because of indicators. No, price doesn't move because of indicators. Price moves because of real bank and institutional orders. And these real bank and institutional orders are influenced by macroeconomic factors. What two different economies are doing. Let's say what the United States economy is doing and what the Australian economy is doing. This is what is going to influence the actions of banks and institutions. All right. So just to mention that it tells you that RSI or MACD on its own cannot influence a forex pair buying or influence why a forex pair is selling. Those factors cannot actually, cause prices to move or make particular forex pair begin to buy or begin to sell. No, what actually drives currency prices are the actions, all right, of institutions, whether central banks, hedge funds, investment banks, in those particular economy, which are influenced by real economic, all right, data or geopolitical news and all of that. Okay. If we ask ourselves who really moves the forex market, all right, who moves the forex market? Forex market is not moved by telegram channels, you know, indicators or retail traders. Forex market is being moved by one central banks. Central banks are the major drivers of the forex market because they dictate the currency flow, all right, of each economy or the investment flow of each economy using their monetary policy tool, especially like interest rates, all right. And also big banks like hedge funds, these guys also move the market, but the central banks are the major people that set the tone of what the forex market. Governments, also send, move the forex market. Maybe when you hear things like trade war, tariffs, all of those things, or maybe even a war, all right, a full blown military war, can also move the forex market. So these are some factors that really move the market, not really indicators. Indicators are backward looking, all right. So if we ask ourselves, why do banks need economists? They need policymakers, they need analysts, and not traders who understand how RSI moves or traders who understand how MACD moves. Why do they actually need economists? Why do they actually need people who understand the financial markets proper, economic data and variables, and not people who understand how technical indicators works? Now, why they do this is simply because they understand that the financial market moves because of a strong economy against a weak economy. They understand this factor that the financial market or the currency markets or forex pairs are moving because of a strong economy or a strong currency against a weak economy or a weak currency. All right, because a country with a strong economic data means its currency is going to be strong. And the currency with weak economic data simply means that its currency is going to be what? Weak. An economy with weak economic data, its currency is going to be weak. So this is what actually causes, all right, the forex market to move because there has to be an imbalance. All right, just imagine placing this television on my phone. All right, putting it in a weighing balance. Definitely, this television has more weight compared to my smartphone. So, the weighing balance is going to tilt towards the side of the television. That is what strong and weak economy, actually, how it actually drives what the currency markets. All right. So we're not trying to say that technicals or technical indicators don't actually fit in, or that they are not, important in the financial market. No, get that straight. All right. Technical analysis or technical indicators are actually important, and they have where they fit in. All right, but they don't determine the direction of currency prices. All right. What they actually do is just to tell you where to get in, not telling you that you should buy or you should sell. They can tell you when to buy and when to sell, but not telling you that this currency should be buying or this currency should be selling. You should already have that bias by the understanding of fundamental analysis, which is what exactly moves the forex market. All right. So technical analysis or technical indicators now tells you when and where to get in or get out. All right. Good. So because this is just very basic. You need to understand the system or the systematic process of how the financial market works or how you should be operating as a forex trader. Understanding that fundamental first, then technicals comes what second. And why most traders lose is because of they always think you know fundamental analysis are not necessarily important. That when you understand your technicals, when price just breaks a structural or structural low, they are okay with it. Or when a technical indicator crosses over or RSI goes above 70, all those things, they begin to think, okay, market is overbought or market is oversold. No, this is the reasons why a whole lot of retail traders lose the forex market, because they focus on the wrong thing. They don't actually understand what moves the forex market. So, after explaining all these things, what you should understand in this lesson is that what actually moves the forex market is fundamental, because that tells you your bias. Am I going to be buying or am I going to be selling? All right. Is the central banks trying to hike interest rate or cut interest rate? We are going to go further, in future classes about these topics, one after the other. But just as the first video, to make you understand what actually drives the forex market. All right, is it technicals or just technical indicators? No. What drives the forex market or the currency market is fundamental analysis. Okay, technical indicators just tell you where to get in and where to get out. All right. So that is it for this lesson, and I believe this is going to be very helpful for a whole lot of traders. All right. So share your thoughts and ask me questions in the comment section, and I'm going to be trying so hard to answer all those questions. All right. Make sure you like this video, share this video to other traders because it's going to be helpful. All right. So thank you very much and see you in my next video. Bye for now.